Today's a historical day, one of the craziest moments that I can think of besides the dot-com period. Kinda dates me, doesn't it? The short squeeze pushed GME, AMC, and other man-made stocks such as BB, NOK, SPCE, and several other stocks, spiking it up double to triple-digit percentage gains, while the broad market is selling off. No, this is not another GME or AMC stock video. It's about de-risking your portfolio as indicators to tell me that something bigger is about to happen. In this video, I will share you with my thoughts and what I plan to do. So stick around. Sawasdee krap. That's hello in Thai and welcome to Quantum Finance. My name is Anthony and I'm a former engineer and data analyst turned entrepreneur and investor. In my prior career, I was very successful in creating predictive models for Fortune 500 companies in Silicon Valley using historical data to predict future outcomes. I applied my knowledge to my own portfolio and in the past 12 months, I grew it to more than 500%. In this channel, I focus on high growth and disruptive technology stocks for short-term momentum trades and long-term investments. If you're new, welcome. And if you're returning, welcome back and thank you for your support. Please help us grow these small channels to 5,000 subscribers by hitting the sub button below. Make sure to hit the notification button so you get my latest video update. While you're at it, please do like, share, and comment. Let me know what your thoughts are below. I will see you down there. Please note that this video is for entertainment purpose only. I am not licensed. However, that does not mean that I won't present you with facts and trading ideas that will supercharge up your portfolio. No BS and straight to the point. So let's get right into it. I have never seen anything like this today. So be careful on buying those short squeeze stocks. They can go up very fast, but they can also fall just as fast, if not even faster. Let's take a look at the recent TLRY or TLRY. Look at what happened during the hype. It spiked up and then it plummeted. It has never recovered since. I know there's so much momentum in GME and AMC right now, but the pullback will happen eventually. If you're already in, please make sure to lock in your profits. I know from speaking from my own experience. Long story short, when I was in my early career at the age of 21 trading and investing, I was betting everything I had on Amazon. I maxed my margin accounts. My account was about $1.3 million at the time. Then the famous dot-com bubble burst in year 2000. I was young, greedy, and stupid. I refused to sell thinking it would rebound. Within a week or two, my account was on margin call. My brokerage account was liquidated by the brokerage firm and I lost everything that I worked so hard to build. This was pale compared to my coworker who invested his life savings into Qualcomm or QCOM. At its peak, his portfolio was worth $3.5 million on December 1999. When it crashed, unfortunately, he lost his money and he lost his family. It took Qualcomm 20 years to recover, where in 2019, it finally reached the same stock price as it was in 1999. This whole week, I've been sitting on the sideline as a spectator watching everything unfold. There's a movement that the wealthy and the Wall Street elites do not understand. Reddit YOLO community has created a crowdsourcing or collective crusade against the Wall Street short sellers. There's about 3 million of Robinhood investors who are not looking at the fundamentals, but just focusing on locking up shares by buying them and holding on to them. They're making a statement. This is a movement. This democratization is changing how we invest. I'm happy to hear that so many people are making a lot of money and are able to pay off their student loans, pay off their debts, support their family, etc. My only concern is that it may cause pain elsewhere. I'm somewhat upset that mainstream media has failed to understand what is happening. Think about this. Why did Wall Street, who created the 2008 economic crisis, got bailed by the government when millions of retail investors got screwed? Most Americans lost their homes, jobs, and are bag holders. The system is rigged by the elites. Why is that Wall Street elites break the law, they do not get punished, but are rewarded with a massive bailout? And worst part, we the taxpayers are paying for it. This past few weeks have demonstrated the power of the internet. People are resonating with the gamification and are sticking it back to the Wall Street short sellers. David is winning against Goliath, but for how long? Big money is already fighting back. My concern is that regulators will step in and make changes in favor of big institutions. After all, they do control the system. I'm concerned that regulators could halt trading on GME and AMC. This could possibly create a panic sell, but most unlikely because I don't see any laws has been broken in speculating GME and AMC, and for the Robinhood investors to crowdsource, to buy and hold onto the stocks and drive up the stock price, that's their right. But several brokerage firms have already raised the margin requirement, limiting their buying power. That could be a good thing or a bad thing. I don't know. You decide. My other concern is that this could create fear in the market for other investors to get in. Today's market sell-off was not helpful. What caused this? This morning, President Biden signed a series of executive orders to prioritize climate change across all levels of government and put the USA on track as it curved against planet warming carbon emissions. He also directed the Secretary of Interior Department to halt new oil and natural gas leases on public lands and waters and begin a thorough review of existing permits of fossil fuel development. Nothing surprising here. All great news for green energy sector, but the broad market saw off regardless, including the EV and green energy stocks. Now let's look at the VIX, VIXX index, or volatility index, or aka the fear index. Look at the 1-year chart. The spike on the left corresponds to the initial drop in late February and the subsequent crash in March. Then as the chart shows, once investors become more convinced that the market would survive the pandemic, the VIX level off and return to normal. I'm not trying to scare anyone. I just want to create an awareness so that we don't become complacent and to be prepared. Notice the 1-day chart. The VIX spiked up 61.64%. The investors are very fearful of the market right now. Manage your risk by minimizing and paying off your margins. Don't just blindly put your money into whatever stock that grabs your attention. The best strategy in market conditions like this is to stick with a long-term investing focus. If you concentrate on companies that have a potential to become giants of their industry in the next 10 to 15 years, then what happens next in a month or two doesn't matter. It becomes less important. Over the long period, you're almost guaranteed that you'll see at least 1 or 2 major stock market pullback. But that doesn't mean your stock will suffer. The other thing to do when market gets choppy is to have money set aside so that you can invest in the event of a crash. It's always hard to do, but those who were able to pull the trigger and buy stocks while the market was plunging in February and March 2020, they now own shares that have generated amazing returns, as in my case. In conclusion, by being prepared, you have an edge over your peers and have a better chance of building a life-changing wealth over the long run. Wish you all much success. And be safe with your trades and investments. So there you have it. If you find the content of this video valuable, please hit the sub button below. If you have not already done so, please do like, share, and comment. Let me know what your thoughts are below. I will see you there. Thank you for your support. Happy trading and investing. Let's go make some moodlas.